It's about that time of day again. My name is Joseph. It's Monday evening, March the 13th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is range-bound with a rare bow tie pattern, which, like all ranges, is telling us exactly where and where not to be looking for the best trading opportunities tomorrow. The S&P is range-bound, and we have a measured move and a bull channel giving us an excellent place to look for selling opportunities tomorrow using those traps and failures. Gold is bullish, but a short-term trading range on the chart tells us to avoid selling this low and watch for traps above the high tomorrow. The euro is bearish, but an excellent example of market psychology on the euro tonight is telling us to wait for more confirmation before we try selling more tomorrow. The FDAX is bullish, but we have a major objective just a few points above us, and the narrowing range tells us to be looking for traps before previous swings as we go into rollover on the FDAX. Boy, oh boy, we're back to the action after daylight savings time this weekend. We're running a little bit low on sleep, but high on excitement going into this very important quadruple witching week, Fed week, big third full week of the month of March. Got another great newsletter in store for you guys and gals tonight. We got plenty of reliable opportunities setting up for tomorrow. And as you know, I always have a great plan of attack here for you guys. Before we jump into this video, though, I do want to remind you the only place to watch the full-length version of this video newsletter is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, it's just a small portion of the YouTube channel. Remember, inside the description of that YouTube video, there's a link in the description. Follow that link and come join me on the blog here at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, always posting important links and charts and updates throughout the day. Download those charts right below the video tonight. You can grab all the charts from tonight's video and have them ready on your computer, right where it says click here to download today's charts. And please, please, please don't forget to grab your free pass. You'll learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass in the upper right-hand corner if you're not an advanced member here at School of Trade. And please don't forget, we get a great frequently asked questions page on the right-hand side of our website. If you have any questions here, right, don't forget there's also a live support tool on the right-hand side of our website. Boy, oh boy, hope you guys had a great weekend. That weekend just flew right by, didn't it? It felt a little bit light this weekend, didn't it? I know. That's all right. We'll catch up. This weekend. We got a busy week ahead of us. We got quadruple witching. We've got Fed Day, not tomorrow, but on Wednesday. We've got elections kicking off for the year of 2017 in Europe. Did I say we had a lot going on this week? We definitely do. Tomorrow, of course, being Tuesday, March the 14th. Real quick, though, just to get an idea of what's happening here right now. This is the third week of the third month of the year, right? Third week, third month. First week, second week, third full week. That means quadruple witching is this Friday. Now, that doesn't really mean much until we get into Thursday and Friday. Thursday and Friday is where we start seeing all the options traders start balancing portfolios, right? Shouldn't affect us too badly on markets like the euro, like crude oil. But as far as gold, right, and the S&P, you're probably going to see some impacts of that later on this week. It does also have a bit of a self-fulfilling prophecy to it. As we get later on in the week, Thursday and Friday, we start seeing a little bit lower volume. That's always a little bit of a question mark, right? We don't really quite know how this week will end up as far as volume goes. But we definitely know that Friday is quadruple witching. So anticipating some choppiness Thursday and Friday, possibly a little bit lower volume. But you know me, like I always say, don't worry about things you don't know enough about yet. Wait until we see that later on this week. Just so you know, though, be watching for that later on in the week. Earlier on here, we also have, of course, tomorrow is the FOMC meeting begins tomorrow morning, right, on the 14th. That means on Wednesday afternoon, we have the Fed Day here this week. Keep going. There we go. Right, so Wednesday, we're going to hear from the FOMC announcement. So Wednesday, going to be kind of an early in, early out scenario, kind of a half day on Wednesday. We get inventories on Wednesday as well. And, of course, that announcement, right, that announcement on Wednesday afternoon will be important as well. So kind of a half day there on Wednesday. And then I would be remiss if I did not tell you to grab your popcorn, right? Whatever you like to enjoy at the movies. We're going to start looking at the first election here of a very, very important election season, right, or year of elections, right, starting in Europe. As you know, we just finished up our election here in the U.S., and we've got a few more dominoes, right, that are lining up right now in Europe. There are going to be a lot of people watching those election results as we go into end of this week and then next week, and right, we start going to some of the bigger economy elections here coming into right the next few months. So very, very exciting time if you partake in some of the excitement around these elections. We got that going on this week here on Wednesday. That'll obviously be happening more in the European session on Wednesday. I think that covers most of it. I'm going to be here with you guys the entire week this week, and a great, great week ahead of us. We made it through rollover on most of the markets. We just have rollover waiting on the FDAX. I'm still waiting to figure out what the FDAX wants to do here about the rollover. We're still waiting for that rollover here to the 617 on the FDAX. They're a few days late on that, but that's all right. That's all right. I can wait around for the FDAX to roll over, no big deal. Looking at news for tomorrow. We can't forget about the news tonight, though. 10 p.m. Eastern Time from our friends in China. Be aware of that news tonight. If you're trading the overnight Asian session into London tomorrow, watch out for that news right in the overnight session tonight from China. It will definitely be a market-moving event. We then go right through the early part of the morning tomorrow. Again, I'm not going to worry too much about the FOMC meeting tomorrow. It's a two-day meeting tomorrow, of course, right? Tomorrow's the bagels and donuts, right? And, a little bit of networking event, right? I'm sure Yellen doing impersonations tomorrow, first day of the meeting, right? Like she always does. I'm joking around with you. But again, not expecting to hear much tomorrow regarding the Fed. That'll be on Wednesday afternoon. We go right into this, of course, at 6 a.m. tomorrow, industrial production, and of course PPI tomorrow, right, 8:30 a.m. Those are pretty much the big news events on the calendar for tomorrow. 6 a.m. is great, right? That'll give you guys a little shot in the arm at the end of the session in London tomorrow, right? Afternoon session in London, right? Of course, early morning here in the U.S. session, and of course, we got the PPI at 8:30 a.m., right, to keep the party rolling into the U.S. morning session tomorrow. So be aware of that FOMC announcement on Wednesday, quad witching on Friday, election in Europe, right, starting off on Wednesday as well. Like I said, did I mention it was a busy, busy week ahead of us? Absolutely. Looking for another great week here with you guys as we crack this sucker open. How about some crude? We'll go crude, S&P, a little bit of gold, euro. We'll round it out tonight with the FDAX. Crude is range bound with a triangle, which is now developed into a very good example of a cute little bow tie pattern here tonight as price tries to find balance after last week's massive run lower. The trading range tells us to sell the highs, buy the lows, and avoid the middle tomorrow. Looking left, it's easy to see this market may be considered a spike and range, right? Looking left here, it's pretty easy to see this market may be seen as a spike in range, right? Coming after last Thursday, Wednesday, Thursday, Friday move lower. So for tomorrow, our goal will be to sell high using buyer failure for a target going back down to that low. Now check out that measured move overhead. That measured move combined with today's high at 68 will make for some easy levels of resistance up top there for sellers to start picking off those shorts, right, for tomorrow. So keep an eye on those highs. Now, we don't see this very often, but it's not the most uncommon thing we see, right, every month here on crude oil, right? So market starts off today with a triangle, right? That triangle, of course, now extend out those, or you got good rotation there inside that triangle. Did a great day today, selling off the high of that triangle. You really could have played this. It was wide enough to play it on both sides of the market today, because that triangle at the beginning of the day was pretty wide, if you recall, and you could definitely buy low and sell high. With that big bear move down yesterday, though, it was pretty easy to see the overall right direction would be bearish here anytime it goes high. So price goes up. Beautiful example here. Price breaks outside of that range, and what's the plan on a range-bound day? Sell it back down again, right? So price jumps up, sell it back down. They couldn't get the full rotation back to the opposite side of the range, but not a huge surprise, right? Not a huge surprise. That triangle is really where you expect the most amount of profit taking to occur. And now once we get back to that low of that triangle, or back to the middle of the triangle, right, that's pretty much where things almost started. And I almost was tempted to kind of draw this out as another trading range here right now. You can kind of see it looks very, very similar here to another trading range. I don't want to go messing up too much here because it doesn't really give you anything new. It really doesn't, just by knowing where that trading range is, it's nice, but it doesn't really give you anything new that you would need information with. For example, assuming this is a range, right? I already know this is the range right here, right? This is the range from that triangle. So we're trying to go up so we can sell it back down, down, so we can buy it back up, right? Just stay the heck out of the middle, right, of that range. Looking at measured moves, 1, 2, 3, right? We get the measured move going higher. Keep it on this area up here. Definitely this little range up here from 75 to 68. Hopefully we can get a chance to sell that high tomorrow. We'll have to wait and see. We may only get to that 48.59 here, right, for all I know tomorrow. So we'd love to see the market up in those highs. We could sell this sucker back down. At the same time, right, same time here, A, B, C, D for that measured move below. That'll be a great spot for a profit target for the bears. Also be a great spot there if you're looking to be a buyer. Just remember though, long-term trend right now is bearish, and it's one of those markets where it's pretty easy to think everybody's going to be trying to find a way to sell high right now, trying to call a top, right, in a correction. So just be careful about trying to buy low. Make sure you wait for that 2-try rule at the low, right, and buy off seller failure. Also, one thing I want to remind you too is watch that swing high there at 59. If we do make a new high, then that measured move down there at 03 needs to be recalculated, right? We teach that stuff in the intermediate class here at School of Trade. So most important thing here going forward, we have a trading range environment. And again, I want you to think about it this way, right? Think about this trading range like that. Don't think about it so much as a triangle. It's a triangle. It's a bow tie. What's a bow tie? The bow tie, of course, is a triangle that continues, right, and rotates now in the opposite direction. It's kind of like a megaphone pattern, right? And so now, of course, we want to use that. We want to use those trend lines. I want to use those trend lines to be able to sell off that high, right? Sell off that high. Really, really simple idea there. But again, when you look at a triangle like this or the bow tie, right? Mark up that high, mark up that low, and this is really the range you want to be focused on. Really get this market up so we can sell it back down, get it down so we can buy it back up, right? Really try to find a good, again, you can really mark up that range like that. So I want this price to go up. I've identified 59, 68, 75. It's pretty easy to identify those areas overhead, right? Those are pretty ripe for the pick in there. At the same time here, really anything that goes up here could break above that little swing. It doesn't really matter to me. Go up, buyer failure, and back down, right? Up, buyer failure or trap high, and sell back down. Obviously, if it goes lower here, seller failure and back up, right? Our objective really right now, though, is to be very careful being a buyer here off those lows just because of that overall direction down. What would it take this to be a bull market? Well, again, looking left here, you can see here, right? It's not that difficult to look at this thing as a real strong move down, right, into a trading range. So you want to be careful because this thing goes up, it's probably going to be sold right back down again. But with that said, though, these are very active markets. We're only, we really want to pay attention to what's happening every day because you can't really rely on what the market's telling you multi-day here right now. So what would it take to be a bull? Well, in my opinion, you've got to be thinking anything that rises up into this area over here is going to be sold or seen as a selling opportunity. So I'd want to see some strength. I want to see it hold and then continue higher, right? Really show me that these buyers mean business, because if they can't, right, they can give me some strength. They can easily push higher here. They can easily pull back, but if they can't hold that pullback, oh boy, it'll be a bloodbath there tomorrow, right, for the bears going right back into that range. Don't forget easy targets. As you can see here, the middle of that triangle, you'll notice how, right, target. This is an area of support people like to use off the middle of that triangle. That'll be a target, right, and then of course other target here back down to the opposite side of that triangle for the bears tomorrow. Bulls, stay patient here. Don't try to be a hero here. Don't try to pick a bottom right now on crude, right? You'll die a death of 1,000 paper cuts, right? Trying to pick a bottom here in a market that's this bearish right now. How about the S&P? The S&P's range bound and trading above the highs, just a few points below that measured move this evening. The trading range tells us to sell the highs, buy the low, avoid the middle, and with price pushing higher, we're now looking forward to using the 2-try rule to sell with failures going back into the range tomorrow. One thing to keep an eye on is this sluggish bull channel, right, that I have in the chart tonight, and combine that bull channel with the measured move, right, will make for an excellent resistance zone, right, to be looking for those 2 tries. So looking at this coming into the range today here, I had to really kind of dial this thing in on a faster time frame. You can see it's very low volume. By the way, we are on the 617 contract. This is one of many markets here that did roll forward.